Welcome to the Investing Podcast, presented by Tusk Media. Now, for your early morning look at financial news and activity in audio and video form, here's the Morning Market Mimosa.
Good morning, everybody. Welcome back to the Investing Podcast. This is your Morning Market Mimosa. It's Friday, July 22nd, 2016. Glad to be here. Happy it's Friday. We're going to talk to you now. We're going to talk to you at lunchtime, and then we're going to be out of here. We'll do some housekeeping at the end, but let's just jump right in. Futures up just a little bit after a slightly down day yesterday. Dow is up about 8 basis points, so basically flat, up less than a tenth of 1%. S&P up 13 basis points, NASDAQ up 10 basis points, gold down about 0.5%. Oil was pretty flat, kind of in that $44 range or so. A couple companies we want to talk about briefly. Again, it's earnings week. We're going to have a lot of earnings this week and next week. We've been talking about them all week. Let's highlight a couple, and this will be kind of a fun day of earnings. GE. They announced earnings today, and we've talked about this, I think, on the podcast before. About what GAAP earnings are. GAAP earnings are the quote-unquote by-the-book official way to do it. Oftentimes you will see earnings released in non-GAAP ways, and businesses will tell you, corporations will tell you, CFOs will tell you that, oh, we use non-GAAP numbers because it more accurately reflects our true business performance. And sometimes that very much is the case. That can be very legitimate, but typically you'll see GAAP EPS and non-GAAP EPS. But what's interesting about GE is they actually released 4 different sets of earnings data and kind of just threw it all out there. I think this was an ill-conceived attempt at transparency. So high five to you, GE. But at the end of the day, I think it just kind of confused everybody. The market's not responding real positively, by the way. GE's down a little more than 2% on a pre-market basis. But GAAP-wise, they reported earnings of $2.74. Their EPS from continued operations, $0.36. Their EPS, operating EPS, so somehow somewhat different than continued operations, was actually $0.39. So I guess they've got something in their operations that's no longer continuing that was a 3-cent bump. I guess that's the big takeaway. I really don't know what they're trying to tell us here. And then non-GAAP was $0.51. I think the big takeaway here is that when you share this much, it makes no sense. It's kind of over the top. Again, I think they were trying to be transparent. They sold off a lot of businesses, most notably GE Capital, which they spun off, was a huge branch, kind of their financial arm. So I think that they're trying to make sure that that's all accounted for, but the reality is there's some really, really smart people that are capable of analyzing a business like GE and looking at this number and discounting it to reflect things that are no longer there. So I think they just went out of their way, created all this stuff, again, in the name of transparency. And I think it's kind of confusing. I think people, they're certainly not necessarily encouraged by it, and maybe if these numbers were all higher across the board, maybe the market would be up, and you can't really change that. I'm glad they didn't try to, but it's, again, kind of an ill-conceived attempt at transparency, I think. Starbucks, speaking of ill-conceived, Starbucks missed on one crucial number, which was same-store sales growth. So if you think about this in the most simple way, Starbucks sells Mocha Froca lattes. Everybody loves the Mocha Froca latte. I think that's on the menu. I might have made that up. But if they normally sell 100, people were hoping they'd sell 101. They want you to sell more at that same store over time. And so people were expecting 5.7% same-store growth globally. So any given Starbucks, they would expect on average to sell 5.7% more. That's what the Wall Street analysts were expecting. That number was up, but it was only up to 4%. So that's almost a 50% letdown from what was expected. And that's not good. The market doesn't respond well to growth like that. You see that similarly with things like Twitter and monthly active users. If the growth isn't there, it doesn't matter that it's growing. It's not growing as fast as people would like. You start to see those things matter. We talked about that actually earlier this week with Netflix. So same stores growth was not what people wanted with Starbucks. Don't worry, folks. Starbucks has an excuse. They blamed it on, you ready for this one? Social unrest. Absolutely fantastic. I love that Starbucks is sticking to their guns. They're making everything a social movement. You may remember a couple weeks ago I talked about how it was great that Howard Schultz was giving raises, he's the CEO and founder of Starbucks, that he was giving raises to their managers and their partners at their stores. But it was also kind of ludicrous that his reasoning for it was that it was a reaction to the week of tragedy, the tragic week involving police shootings and protests and all that kind of stuff. Again, that's not really a reason you give somebody a raise. Social unrest doesn't justify a raise for everybody. It's also not really an excuse when you don't grow your company the way you said you would globally, especially when you miss the mark by that big of a margin. So social unrest, when in doubt, Starbucks, the answer is social unrest. Tusk Media, fun week here. We had the interview with Cody Willard. It's the most downloaded thing we've ever done. Go check it out. It's still on there. Had a great time with him. Follow him on Twitter at Cody Willard. Check out Scutify, all that good stuff. We're Scutifying. We're Scutified. I don't know what the word is there, but Scutify, S-C-U-T-I-F-Y, just one T. I always get confused by that, but check it out. So we're basically sharing stuff on there, sharing all our videos so you can check things out there. Lots of downloads this week, lots of traction. Had a lot of people checking out the Periscope last night. I understand it broke up. We had to do it into 2 videos, but thanks to those, especially those that made the jump to both of them. But if you want to go back, go check us out on Twitter at Tusk Media LLC. We've got both of those videos. They stay up for like 24 hours, so they're going to be up till about 4 o'clock. We're going to be back in a couple hours for the stock market power lunch. We will not be back this afternoon unless something crazy happens. Y'all have a great day. If you happen to cut out early, have a great weekend. We will talk to you soon.
Tusk Media is a subsidiary of Narwhal Capital Management. Ratings and reviews of Tusk Media content are not to be construed as endorsements of opinions, analysis, or services offered by Tusk or its parent company. The opinions and predictions shared here are professional beliefs at the time of publication. We are not under duress from any of the corporate entities mentioned. This is not a solicitation to take any particular action. Although we are investment advisors, this information should not be considered investment, legal, or tax advice. We strive to be as impartial, insightful, and accurate as possible. We base our opinions, analysis, and calculations on information we believe to be reliable, but we cannot guarantee its accuracy. We can, however, guarantee that our opinions will sometimes be flat out wrong due to a variety of factors. Employees and clients of Narwhal Capital Management may or may not hold positions in the securities detailed and may or may not hold these positions in the future. A full list of all securities purchased, sold, or held during the 12 months preceding the date of this publication can be provided upon request. Unless otherwise noted, all data accessed via MarketWatch or the Bloomberg terminal. Past performance does not guarantee future results. A copy of Narwhal's Form ADV is available at the SEC's website, www.advisorinfo.sec.gov, or from Narwhal upon written request.